October, known as Uptober in crypto circles, has been a wild ride for Ethereum. After a sharp drop triggered by a sudden US-China tariff escalation on October 10th, Ethereum plunged to $3,510, wiping out billions from the crypto market. Over $235 million in long positions were liquidated in hours, a harsh reminder of the risks in leveraged trading. Yet, Ethereum's resilience shone through. Buyers quickly stepped in, driving a strong recovery back above $4,200. The $4,100 level has become a key support, reflecting strong investor confidence. Despite the turbulence, Ethereum is still up 50% year over year, outpacing most traditional assets. The recent volatility is just one chapter in a broader October rally that's energized the entire crypto sector. Earlier this month, Bitcoin and BNB hit new all-time highs, and Ethereum nearly matched its own, peaking at $4,753, just shy of its record. The $5,000 milestone felt within reach, but the recent setback has tempered immediate excitement. Still, the market's bullish sentiment remains intact. The big question now, was this just a temporary stumble, or the start of a deeper correction? Ethereum's ability to rebound so quickly suggests strong underlying demand. Investors are watching closely to see if the recovery holds or if more volatility is ahead. The market's reaction to global events shows just how intertwined crypto and traditional finance have become. As October continues, all eyes are on whether Ethereum can maintain its momentum and break new ground. The next few weeks will be crucial in determining the direction of the market. Will Ethereum's resilience be enough to push it to new highs, or are more challenges on the horizon? Only time will tell, but the stage is set for an exciting finish to the month. Institutional money is pouring into Ethereum like never before, and it's changing the game. The launch of spot Ethereum ETFs has opened the floodgates, allowing traditional investors to gain exposure without holding the asset directly. In October alone, these ETFs saw $1.1 billion in net inflows, with 8 straight days of positive momentum. Total assets in ETH ETFs now exceed $14 billion, driven by pension funds, asset managers, and corporations. During the recent dip, big players like BitMine bought aggressively, adding 202,000 ETH in a single move, now holding over 2.5% of all ETH. Other large wallets also accumulated, showing classic institutional buy-the-dip behavior. Unlike retail traders, institutions see volatility as an opportunity, not a threat. They're betting on Ethereum's long-term growth, DeFi expansion, and its role in a programmable financial system. This wave of institutional buying provides a strong price floor, making a total market collapse less likely. The presence of these deep-pocketed investors is a powerful bullish force. Their conviction is reshaping the market, turning every dip into a potential launchpad. As more institutions join in, Ethereum's foundation only grows stronger. The era of institutional crypto adoption is here, and it's just getting started. While demand for Ethereum surges, its available supply is shrinking fast. ETH on exchanges is at a multi-year low, signaling that investors are moving coins to private wallets or staking them for the long term. Staking, enabled by Ethereum's shift to proof of stake, locks up coins and pays out attractive yields, further reducing liquid supply. This creates a classic supply squeeze. Rising demand meets falling supply. As more ETH is staked or held off exchanges, scarcity drives up value. The recent dip saw large buyers scoop up ETH and immediately move it into cold storage or staking contracts, tightening supply even more. Unlike past cycles driven by speculation, today's market is more mature with real utility in DeFi and staking. ETH is no longer just a speculative asset, it's productive, earning yield and powering a new financial system. This dynamic underpins the ongoing supply shock and sets the stage for a potential move to $5,000 and beyond. The feedback loop is clear. Scarcity fuels price, which attracts more demand, intensifying the squeeze. As long as this trend continues, Ethereum's price floor keeps rising. The foundation for the next rally is being built, one staked coin at a time. Ethereum's value isn't just about market forces, it's about relentless innovation. The upcoming Fusaka upgrade, set for November, is a game changer. Its main feature, sharding, will split the network into parallel lanes, massively boosting transaction speed and lowering costs. Think of it as turning a single-lane road into a multi-lane superhighway. This upgrade builds on the successful Pectra update earlier this year, marking steady progress toward a scalable global platform. If Fusaka delivers, decentralized apps will be faster and cheaper, attracting more users and developers. For investors, this is a powerful narrative. Real technological progress driving real value. A more efficient Ethereum means more demand for ETH, the fuel of the network. As the upgrade nears, confidence is building that Ethereum can break through resistance and reach new heights. The future of Ethereum is being written in code, and the next chapter could be its most important yet. Technical analysis reveals the battlegrounds where Ethereum's fate will be decided. The $4,000 level is the most critical support. Holding above it keeps the bulls in control. A drop below could trigger a deeper correction, with $3,900 and $3,400, $3,600 as the next defense zones. On the upside, the $4,740–$4,800 resistance has repeatedly capped rallies. Breaking above this ceiling is essential for a run at $5,000. A decisive move past $4,800 could unleash a wave of FOMO buying and propel ETH to new highs. Short-term indicators are mixed, but the long-term trend remains bullish. The market is at a crossroads, with buyers and sellers locked in a tug-of-war. The next breakout, or breakdown, will set the tone for the rest of the year. All eyes are on these key levels as Ethereum's race to $5,000 heats up. The path to $5,000 isn't without obstacles. Macroeconomic shocks, like the recent tariff dispute, can derail even the strongest rallies. Ethereum faces tough resistance at $4,800, where sellers have repeatedly pushed back. The derivatives market adds another layer of complexity. With large options, positions potentially capping price gains. High leverage amplifies both gains and losses, making sudden crashes more likely. The October 10th crash saw over $600 million in liquidations, showing how quickly things can unravel. Even with strong fundamentals, volatility is always lurking. Investors must stay alert. One unexpected event can change everything. The journey to $5,000 will test both nerves and conviction. Expert opinions on Ethereum's future are split. Bulls like Standard Chartered see ETH hitting $7,500 by year-end, while Fundstrat's Mark Newton targets $5,500 by mid-October. Prediction markets are overwhelmingly bullish, with 80% betting on a move to $5,000 before any major drop. But not everyone is convinced. Citigroup offers a more cautious $4,300 year-end target, warning that much of the good news may already be priced in. Some analysts highlight downside risks if ETH breaks below $4,000, with targets as low as $3,560. On-chain indicators like BBP and AO are flashing short-term caution. The market's next move is uncertain, with both bullish momentum and bearish warnings in play. Investors are weighing explosive upside against the risk of another sharp correction. The only certainty is that volatility will remain high. The race to $5,000 isn't just about Ethereum, it's also a showdown with gold. As of early October, gold trades near $4,000 per ounce, up over 50% this year, while Ethereum sits just above at $4,330. Gold's technicals look strong, with bullish patterns and targets as high as $5,657. Ethereum, meanwhile, faces short-term uncertainty after a sharp rejection at $4,800. Some analysts believe gold has the technical edge to reach $5,000 first, but this race is about more than price. It's a clash of narratives. Gold is the ultimate safe haven. Ethereum is the bet on innovation and the future. Both assets are rallying, reflecting a unique economic moment. Investors are hedging their bets, seeking safety in the old and opportunity in the new. The outcome will shape how markets view risk and reward in 2025. So, will Ethereum win its race to $5,000? The evidence points to a powerful combination of institutional adoption, shrinking supply, and technological progress. The Fusaka upgrade and ETF inflows are not just hype, they're structural shifts. Still, resistance at $4,800 and macro risks remain real threats. The journey won't be a straight line. Volatility and setbacks are inevitable, but Ethereum's long-term trajectory looks strong, with deep buying interest ready to support the price. Whether or not it beats gold to $5,000 Ethereum's future as a foundational digital asset seems secure. The race to $5,000 is a sprint, but the marathon to reshape finance is just beginning. For now, Ethereum looks poised to be a winner in both. The next chapter is about to unfold. Are you ready?